Most people assume what goes up must come down. But does this apply to the housing market and interest rates right now? First off, the main cause of home prices cooling off recently is higher rates. The higher borrowing costs have temporarily reduced demand, and the drastic increase in rates are caused by inflation fears. But inflation is beginning to improve. The million-dollar question isn't how much you can save by waiting. The million-dollar question is how much will it cost you if you choose to wait? So here's the answer to your million-dollar question. Let's just take a $500,000 sales price home in Morris County, New Jersey, and assume a 10% down payment. Now remember, we just said that the main cause of home prices cooling off recently was higher interest rates. And we also said that these drastic increases in rates were caused by inflation fear. But since inflation is beginning to improve, we expect that interest rates are going to improve as well. And for illustration purposes, I want to use 5.5% in 6 months, 5% in 1 year, 4.5% in 2 years, and 4% in 3 years. Now, let's not focus so much on what the loan looks like today with a $500,000 value and an average 30-year fixed interest rate of 6.5%. Let's look ahead to the future to see what this house is going to be worth in 6 months, $507,000. How about in 1 year, $519,000. 2 years, $540,000. And in 3 years, almost $563,000. So waiting 3 years would cost you about $62,000 more in sales price for that same house that you could have purchased today at $500,000. Now let's move to the bottom of my page here. And as we said above, today's current interest rate we're using is 6.5%. And we're assuming rates are going to drop to 5.5% in 6 months, 5% in 1 year, 4.5% in 2 years, and 4% in 3 years. Now you can obviously notice that the monthly savings in 6 months, 1 year, 2 years, or 3 years is pretty substantial. Nothing to scoff at. I mean, who wouldn't like to save $403 a month for a total of almost $5,000 for a year? But these are not the important numbers. These aren't the numbers we should be focusing on. We should be focusing on the loss in a property appreciation and amortization loss. Amortization loss is just the amount of principal on the mortgage you would have taken out that you've paid during the mortgage term. Just look, in 6 months, $9,329 lost. In 1 year, $24,000. In 2 years, almost $51,000. And in 3 years, almost $80,000. Where else can you create $79,000 worth of wealth and equity in just 3 years' time? Unfortunately, the media headlines, they highlight and they sensationalize the negative, and we're all left to figure the rest of this out on our own. It's not fake news, it's fear news, and fear sells. And these headlines are also based on reports from previous weeks, months, and quarters. So understanding how to use this data to project what's going to happen in the future is where I want to focus your attention. So if you're serious about purchasing a home right now, this is what you need to know. Inventory is continuing to decline, spring market is approaching, and rates are expected to improve. The smart money says to expect demand to increase in most growth markets. And we all know what happens when demand is really high and inventory is low. You got it. Prices increase. So whether you're paying rent or you're living rent-free, the cost of waiting could be substantial. In the example we saw, you could have $79,000 in equity in just 3 years, and most of us stay in our homes for an average of 7. In 7 years, that number is over $165,000. That's over a 270% return on your original investment of $50,000. It may not feel like it right now, but this is a window of opportunity. While others begin to give up or decide to wait for whatever reason, you now have the same information institutional buyers and the wealthy have to take advantage of opportunity that's clouded in fear. Buying a home isn't for everyone. It's also the biggest investment most of us will make in a lifetime. So before you make your next offer or decide to wait, make sure you have all the facts and the numbers. Information is the negotiator's greatest weapon. And remember this, fear sells and it keeps us all glued to the tube, but fear does not make money in the real estate market.